Hey guys, it's Pierre. I wanted to give you a market update as we head into spring. So things look like they have certainly started to rebound. I think we are seeing different things happening in different sectors of the market. So let's talk about condominiums first. Condominiums in the lower price points, sort of 500 to under $1 million, seem to be doing a lot better with properties starting to sell more quickly, and also a lot of them are starting to go above asking. Although this is still, I would say, few and far between and not really the norm. However, the days on market are definitely shrinking, and what I'm seeing with prices seem to be sort of like what I call a bear market territory, or like a bottoming of pricing. It seems as though activity is really picking up in that sector, although prices are certainly still depressed between 20 and 30% depending on the neighborhood. And it's a great opportunity with, I think, a rebound is now going to be sooner than later. So being able to pick up 20 or 30% in a relatively short period of time, say 18 to 24 months in a conservative estimate, I think is a really great opportunity, especially since there's also a lot of talk that interest rates have peaked, and it looks as though inflation is coming down. So I don't see the Bank of Canada really reducing rates this year, but certainly with that on the horizon for next year as a probability, the market will pick up when consumer confidence grows and people think that rates are not going to continue to rise. So I think being able to buy and pick up 20 or 30% of the condo market with relatively inexpensive price points is a great option for investors or people to looking to park their money in a lucrative asset. And in terms of houses, we're definitely seeing homes starting to sell in multiple offers again, just like in true Toronto fashion. I would say the lower price points are certainly going above asking, commonly now with offer dates again, which everyone in Toronto is used to. Certainly the best properties are commanding a lot of attention, and in the best pockets around the city, they are starting to go above asking for sure. In the luxury sector, I think this sector is really only down about 10%, and things seem to be slower, but definitely moving. The luxury market between sort of 3 to 5 million is quite healthy, and then above 6 to 8 is still quite slow and down more than 10%. Overall, going into the next month or so is going to be really telling for the market to see where things go. Today, inflation came down to 5.2% from 5.9. It looks as though rates are on pause for right now. People are not flooding to list their homes, and the demand is still there. With house prices starting to go in multiple offers, and the lower end of condominiums starting to go in multiples and move more quickly, that is going to drive up luxury condominiums fairly soon, and I think a rebound could be around the corner. But the next few months will be telling and important to watch and wait and see what happens. Two other markets that we haven't spoken about yet are the assignment market and the pre-construction market, which are closely linked to one another. Assignments are agreements that the original purchaser does not want to close on, and a new buyer assumes the agreement and closes with the builder. What we're seeing is buildings that are taking possession this year were predominantly sold during a time of record low interest rates, and people who may have qualified even with a stress test 3-4 years ago may not be able to pass that same stress test and close on the property they bought. So what we're seeing is a real opportunity in the assignment market, with people looking to exit without closing, and this is giving a huge opportunity to buy in some cases at prices that haven't existed for 4 or 5 years. So if you think about it, would you have wanted to buy 5 years ago? You have the opportunity to do so now in many cases. It's a really great chance to pick up again equity in a short period of time and have something brand new. The pre-construction market is probably doing the worst out of all sectors in real estate. This market is sold to investors who are, not really engaged. Typically, pre-construction sells for a premium, and because the builders have to take into account the rising costs of construction, materials, taxes, and levies. They can't really build for less price at a future date. It doesn't work, because think about being able to build something in the future for cheaper than you can today. It doesn't really exist. So this particular market is going to be slow, in my opinion, throughout the year, likely, certainly until the second half of the year at the very least, until the resale market rebounds and is back to pre-pandemic levels, or at the levels that the peak were at. I think that is the indicator that the pre-construction market is going to need in order to see it return to what it was before. Once the resale condo market rebounds 20 or 30%, I think investors will flock back to the pre-construction market. And I think another thing to consider is that, last year we had half the amount of housing starts that we have had in previous years, and this year we're probably going to have that same number or even less based on what's going on. So the properties that would have started last year or this year are not going to be available to the market in the next 4 or 5 years, which is going to cause a huge glut of inventory that's going to be needed with our rising immigration, and that will definitely in turn boost our market and have it go up again. So, I think in the next 5 years, you're going to see another big boom in Toronto real estate, which when you consider an investment is not really that much time to see a really great return when you think about what other mediums you could place your money in. Want to know why pre-construction prices never go down and why you'll end up paying more for something built in the future? Click the link below in the description.